It's not just another down day on Wall Street. This is, as my friend Jim Cramer is telling me, a crash. Explain what's going on today, Jim.
It's a sector crash.
Yeah.
It's a sector crash. I have been talking on realmoney.com about the possibility of repealing the whole run from 2005 in the commodity and commodity-related products, regardless of whether the commodities themselves have completely fallen off a cliff. Mm-hmm. What's so interesting, and I have a piece later today about fertilizers, is that even just the slight sign of a crack in fertilizer price has produced a halving of a lot of stocks. Even though oil has barely come down, versus certainly not versus year over year, you are seeing a decline in the oil and oil service stocks that indicate that 2005 is beckoning. Now, the difference between now and 2005, obviously, is in 2005 we were looking at the great run-up in China and India and Brazil and Russia. And now I believe we will overshoot to the downside. I think it's entirely possible that not only do we repeal all the way back to 2005, but maybe we go back to 2001, 2002 with these stocks. The moves are breathtaking. Mm-hmm. I talk about in a piece about National Oil Varco. I mean, National Oil Varco was twice its price 3 months ago. National Oil Varco is a company that's a call on oil prices 2012-15 because you need drilling rigs for then because they're all taken up. And it's very clear that what the market is saying is, look, there will be no drilling. Oil is going to go to 40-50, not 80-70. Now, is that rational? We're in a crash, and nobody cares about whether it's rational. I've been trying to buy John Deere 100 shares every 5 points down. Well, I mean, it goes down 5 points a day. There seems to be no fundamental worth for any company involved with industry right now, and that is just incredible.
So what about when I hear things like some of these drillers have contracts out for 2-3 years from now, and their pipelines filled up?
Well, again, I mean, there's an irrationality to it, but let's use the case of the fertilizer companies. They peaked 5 months ago. I told people to sell them in August. We just got our first price decrease. Steel, they peaked 5 months ago. We just got our first price decrease. U.S. steel is almost cut by 2/3. Deere, like I said, cut in half. Potash, cut in half. What these are saying is that just as they got too excited, too jiggy, so to speak, when things were good, they are now going to factor in a worldwide depression, not a recession. And that's pretty severe. The one group that has just begun to roll over is the rails. They, be careful there. They ship phosphate. And they ship coal, which is also rolled over. When you see the end markets roll over and you're transporting end market stuff to end markets, your stocks are going to go down and go down big. I think that the rails are the most vulnerable sector right now.
Is this out of our control right now, Jim?
Totally.
Okay.
Totally out of our control. I want to urge people that this is an Abbott Labs rally, okay? That it's not a worldwide, it's not a total crash. But what it is it's a reversion to what I used to see, Mm-hmm. It's a reversion to what happened for years and years in this market. Let's take Alcoa. Alcoa's down to 18, 19. Alcoa, that says that Alcoa's created no worth whatsoever. And that we're going to go back to a period like 1990, 1992, where all you ever did was short these stocks. Mm-hmm. I mean, it is remarkable. They are acting as if we're in a Great Depression.
All right, thanks very much, Jim Cramer. For more, check out realmoney.com. You're watching Wall Street Confidential. Stay tuned.